Ira Epstein with your financial market update. And we're on Wednesday, December 10th, 2025 at about 7:08 p.m. Central Time. Now, we're going to get jobless claims in the morning, and they are looking for a pretty good size bump up in them. A surprise. We'll see if it comes in, but they're talking about 30,000 plus added to it. The September trade balance data comes out at 7:30. The wholesale inventories and sales data come out at 9 o'clock. The EIA natural gas report at 9:30. OPEC and IEA are due to release their energy reports. They're generally conflicting, so we'll see if we get that. And remember, today was Fed Day, so let's talk about that for a moment. The going into the Fed meeting, the market was looking for what they called a hawkish cut. In other words, a Fed that was reluctant, didn't want to make a cut, but would do it anyways. And you saw that to a degree with three dissensions on the cut, but one of them wanted a 50 basis point. The other two didn't want cuts at all. So, you're getting a Fed that's a little bit different here. What I saw as a problem was a couple of the words that the Fed chair used, systematic problems, as he calls them, in the jobs data. And he thinks that the jobs data is being overstated by each month 40,000 or more. You heard what I just said, overstated by 40,000 or more, that the jobs market is worse than we think. He then floored the market when he said that the Fed, starting December 12th, is going to go to the short-term end of the market and start buying $40 billion worth of Treasuries, and they're going to do that right into the April timeframe. Wow, that really took the market by surprise. If you call that hawkish cut, I don't know what planet you're on. That's not a hawkish cut. That is a Fed that in its own way looked at a sibling of what's called quantitative easing and said, hey, we're going to put very quickly 200 billion back into the market. Maybe we'll need more. We're not certain. We got a Fed that is saying that they don't believe that the jobs data is correct. It was a blow to those that thought that the market was going to see the hawkish cut. We got the cut regardless. Now, as you see, you react one way. Remember, I told you what happens in these markets. The U.S. reacts one way to the market. Asia is now open. They react another way into the market. And by the time it gets over to Europe, you can get a totally different reaction. And that's because of the time frames. At 1 o'clock Chicago time, when we saw the Fed speak, what time is that in Australia? It's, it's what, 3:34 in the morning. I'm just giving an example there. What time's it in Europe? Well, it's nighttime. People are out to dinner or home doing whatever they're doing. And the trade volume, obviously, in the evening is much thinner. So you've got to play all that. You're up $40 in the gold. You're up $2 in the silver. So certain things are happening. The market is saying that the Fed is going to spur on inflation. The Fed is thinking that the tariff inflation is what this is about, not real inflation per se. And that is very important because one of the statements the Fed chair said was that if it weren't for tariffs, he believes that you would be maybe 3/4 of a point lower in going down in inflation readings. Wow. So that took, I think, the market. Everybody was probably their jaws hanging down, mine included, watching how that was all playing out. So let's go to the markets and understand what we've got. First off, you're still losing yield tonight. When you go up in futures, in the bonds and notes, that means you're losing yield on those instruments. Okay, that's a good thing. We're getting a correction where the market's saying the S&P and the Nasdaq overdid it. But remember, we had Oracle reporting, other companies. So there's a certain element that comes into that could be related to the tech sector. And you've got to be careful. That's why the Dow is up and the Russell is up. All right, they're not that part of the market. When we come in and we look at what the S&P is doing, you can see that the market, if it were to close here, it's not at an all-time high. It's down 4 on the week, but it's certainly knocking on the door. The market had a huge move up, but remember, I pointed out to you, oh, darn it, let me fix this.